Stock market seems to be becalmed. How do you invest? The Fed rate decision. How many rate rises this year in the USA? And a house price collapse. Should you be worried? I'm Peter Switzer. There's no Marty or Paul. And I'm mad about them and I'm mad about money. Okay, I'm on my own, so it's a one-man band chat. And let's start off the stock market. It seems to be becalmed. We're not going anywhere. I love the fact that we're not going down. Usually when markets have big rises like we've seen since the Donald Trump election, markets go up, but eventually they say, that's enough, we have to sell off. But at the moment, they don't want to do it. There's a lot of confidence that Trump might actually get some of his policies up, his big policies up, and that's why I think there hasn't been a sell-off. And certainly I think it's a good thing that the markets believe in the Trump story and its implications for the world economy. We're seeing even the European outlook looking better. So from many points of view, until something really significant comes along, I think this market's going to be very, very reluctant to sell off. We'll have to wait and see. Maybe the Fed decision coming up this week could be a little bit of a trigger. Okay, and on the subject of the Fed decision, just like us here on the first Tuesday of any month, the Fed also meets monthly, not on the first Tuesday, but they meet usually around mid-month, and it happens this week. There's nearly 100% certainty that the central bank in the US will raise interest rates for the third time in 9 years. Quite extraordinary. And so what does this mean? This means that the central bank of the USA thinks the US economy is doing well. And the market's going to be looking very close at things called these dot blot points that they put out there. Each member of the reserve of the central bank over there works out whether they think there's going to be 3 or 4 rate rises this year. At the moment, the consensus is there'll be 3. They'll be good for the market. If they go 4, I think the market could get pretty well spooked. So looking at what the predictions are is going to be a very important part of this meeting this week. I'm not worried about interest rate rises. They're way overdue. It's a sign that the US economy is heading in the right direction. It will probably push the green back up a little bit further and the Aus dollar down. That's good for us. And finally, house price collapse. Well, that was the headline in one of the newspapers today. I won't name the paper. I don't like being horrible to newspapers. But when you read into the story, it was really apartment price collapse. And when you went even further, and this came from a Reserve Bank official who was speaking yesterday, when you go into it further, the official said, who's Assistant Governor, Michelle Block to be precise, she said apartments in Brisbane, big worry. Melbourne, a little bit of a worry. Sydney, no worry. That's the summary. And they come up with a headline, house price collapse. Look, a house price collapse would only come if we see a serious recession in Australia where unemployment rises. And by the way, the last recession, 1990-91, house prices generally did not collapse. Some suburbs, some regions, they will collapse. Gold Coast, Palm Beach, they collapse with the GFC. So really do not take these headlines seriously in newspapers. They're just trying to get you on their website. It's just purely clickbait. The Reserve Bank is monitoring the situation, and I think they will probably put some lending controls to restrict investors and foreign buyers. But this market, I'm not worried about the housing market because the economic outlook is looking pretty damn good. And as FDR once said, the only thing to fear is fear itself. And I say the only thing not to fear is the really good economic news out there. I'm Peter Switzer. I'm mad about money.